Is the Bilt credit card too good to be true? Yes, 100%. I believe so. Recently, the Wall Street Journal came out with an article covering the Bilt credit card and how it's losing $10 million a month for Wells Fargo. $10 million is a lot of money to be losing every month, and it could mean bad news for current and future Bilt credit card holders. In this video, I'll be talking about the article itself and how it paints a bad look for Bilt. But I'll also cover Bilt's response to this article because the CEO spoke publicly to defend his company and kind of the direction that they're going. Although, given all this information, I'll explain why I still believe the Bilt card will be nerfed, will be devalued, whatever you want to call it. I believe the Bilt card is too strong as it is right now. Now, how did this drama or information come to light? On June 16th, the Wall Street Journal released an exclusive article detailing financial information about Wells Fargo and Bilt's partnership. You could take a look at the article itself on the Wall Street Journal, but if you're like me and you don't pay for that service, then you can find the article elsewhere. In my case, the nice people over on Reddit posted it for us. Feel free to read the entire article yourself, but I'm just gonna go over the key points for the sake of time. As you might know, Bilt and Wells Fargo released the Bilt credit card in 2022, and more than 1 million accounts were opened within the first 18 months of the launch of this product. I myself was one of those people, and I'm sure many of you watching this video right now also signed up for the credit card back then. However, allegedly, Wells Fargo is losing up to $10 million a month from the Bilt credit card alone because of responsible credit card holders like you and I. Yeah, from responsible credit card holders. And you might be wondering, how is that possible? How is Wells Fargo losing so much money on such a great product? That answer boils down to a few important factors. The first is that Wells Fargo assumed that 50 to 70% of credit card holders would carry a balance on their Bilt credit cards from month to month. This would be great news for Wells Fargo because they can make a lot of money off of interest charges, especially since a lot of those balances include rent payments, which tend to be in the thousands of dollars in balances or in charges every month. Unfortunately for Wells Fargo, in reality, only about 15 to 20% of cardholders are carrying a balance. To me, I find this statistic quite flattering, kind of hilarious, because myself and other credit card YouTubers or enthusiasts like yourself always promote and know that you should be paying your balance on time and in full. So what this is telling me is that most of you with the Bilt credit card out there are being responsible and paying off your credit cards on time and in full. That's a dub for us. I'm not saying I take responsibility for that impact, but it just makes me feel good to know that a lot of people out there, or at least for this credit card, for the Bilt credit card, are practicing good financial habits. For the most part. As a matter of fact, the article even states that many of these Bilt credit card holders are charging their rent on the credit card and paying it off almost immediately. Aside from interest charges, these credit card issuers, like Wells Fargo, make money off of interchange fees, which are the fees associated when the consumer or credit card holder uses the credit card. It's that extra 1.5% to 3% fee that the merchant usually pays the bank just to accept credit cards. So if you are a credit card issuer like Wells Fargo, you want your credit card holders to use your credit cards as often as possible because you're making money every time someone taps, swipes, or charges something on your credit card. And in the case for Wells Fargo, they assumed that 65% of charges on the Bilt credit card would be for non-rent related purchases. But it seems like the opposite is true, where around 65% of charges on the Bilt credit card are just for rent related purchases. That is bad news for Wells because they don't want their credit card to be used just once a month because that doesn't make them a lot of money. But wait a second, doesn't the Bilt credit card have this strict requirement to make 5 purchases per statement balance in order to receive those points for that period? Yeah, and that requirement is so strict that you could purchase 5 bananas with 5 separate transactions for a grand total of $5 to fulfill that requirement. Actually, you technically only really need to buy 4 bananas on 4 different transactions because your rent payment counts as one of those transactions. The problem with this lenient requirement from Wells is that a lot of people were just making 5 super small transactions like $1 Amazon gift cards or 5 packs of gum, which basically meant that Wells Fargo was not making a lot of money on those small purchases, on those interchange fees. And if you're really into this, you could actually make those 4 or 5 purchases on rent day, which is the first of every month, to earn 2x or elevated reward multipliers on those purchases. So you would get 2x instead of just 1x on those generic purchases. As of right now, you might be thinking that Wells Fargo really got the short end of the stick here, and that the Bilt credit card and us credit card holders are really milking this partnership. You would be correct, but it also gets even worse for Wells Fargo. Apparently, about 6 months after the credit card was launched, Wells began paying Bilt a fee of about 0.8% of each rent transaction, even though the bank isn't collecting interchange fees from landlords. And on top of that, Wells also pays Bilt $200 each time a new card account is opened or issued. So if 1 million accounts were opened within the first 18 months, that's $200 million out the door for Wells Fargo just on that bonus alone. With all of this happening, Wells has told Bilt that cardholder behavior isn't providing a path for profitability for the bank, and that more customers who carry balances and use the card for everyday purchases are needed. And with the information that has been released in this article, I agree. Losing over $10 million a month like this is insane. That's bad for business. And that brings me to my next point of what is next for the Bilt credit card. Well, Encore Jain, the CEO of Bilt, tweeted a response to the Wall Street Journal article. He states that there has been no conversation among decision makers to exit the Bilt agreement. To suggest otherwise is false. The Wells Fargo and Bilt contract ends in 2029, so only time will tell if that contract gets renewed again, or if Wells Fargo finds a way out of that contract altogether before that date. Encore also states that the Bilt co-brand has resulted in around 70% of Bilt cardholders being new customers to Wells Fargo. The average age of those customers is 31, and the average FICO credit score is 760, which are all considered high-value customers for a bank. When in reality, I think most of those high-value customers are just people like you and me who are using this system to our advantage by getting away with earning points on rent without carrying over a balance. A Bilt spokesperson also said that, as with all new card launches, it takes multiple years for the initial launch to pay off. But can the Wells Fargo and Bilt co-brand partnership even last multiple years? I think inevitable changes are to come soon to the Bilt credit card in order for this partnership to last until 2029. I think as soon as this year, 2024, we're going to see some changes. Here are my predictions for the changes to the Bilt credit card, and feel free, of course, to leave your thoughts and what you think might happen to the Bilt card in the comments below. Or maybe you think it's not overpowered and you think that it could use buffs to the card. I don't know. The most important change that I think will happen is that the Bilt credit card will have a dollar amount minimum spend in order to be eligible to receive points for that statement cycle or statement period. As I mentioned earlier, as the card is right now, you just need to charge your rent and 4 other non-rent transactions in order to be eligible to receive points. It doesn't matter the dollar amount of those transactions. I've been doing it for months where each non-rent transaction is just $1. Perhaps they might raise that minimum dollar spend threshold to $100. That's just a random number. If that's the case, then I would highly advise you to take advantage of the rent day elevated bonuses and try and spend that $100 on the first of the month to maximize the amount of points that you earn. Another thing that they could do is to raise the number of transactions that you need to charge to the Bilt credit card. It could be something similar to what the American Express Everyday Credit Card has, where you have to use that card 20 times or more to receive 20% more cash back. If I were to guess a number of transactions Bilt would require, it would be over 15, maybe 15 to 30 transactions. The worst case scenario is if Bilt implements a combination of the two, a minimum dollar amount threshold, and they raise the minimum transaction amount threshold. Before I say my last prediction, I want to preface this by mentioning that Bilt has teased the fact that they will be offering the ability to earn points on mortgages in the future. As of right now, the Bilt credit card definitely favors and caters towards renters as opposed to homeowners. However, if they implement the ability to earn points on mortgages, then that's going to attract a whole new batch of customers. This could be good news for Wells Fargo because, hey, you're attracting new customers, and maybe those customers have to get a mortgage through Wells Fargo in order to be eligible to receive points. That's good for business, at least for Wells Fargo. That's a potential prediction as to how Bilt implements this mortgage perk. I also believe that there is a very small chance, or maybe it's just a regular small chance that Wells Fargo and Bilt start charging an annual fee on this credit card. What they could do is maybe they have a Bilt credit card just for renters, which is kind of like what we have right now, and they release a new Bilt credit card targeted towards homeowners or people with mortgages. Then perhaps they would have an annual fee on one of those two cards. Or maybe they combine the ability to earn points on rents and mortgages on one credit card, which is, I guess, the card that we have now, and just slap an annual fee on it. I really do believe that the Bilt credit card is too good to be true. It's a no annual fee card that has amazing transfer partners, pretty great reward multipliers, and the unique ability to earn points on rents. And with this article that came out, there just has to be a nerf coming up for this credit card. Once again, let me know how you guys feel about the Bilt credit card by leaving a comment down below. Other than that, check out this recent ANA business class vlog that I did. Or if you're not into planes and you're into trains, you could watch this video here on the most luxurious train in Japan. These videos are not related to the Bilt credit card by any means. It's just a shameless plug. Thank you guys so much for watching, and I'll see you in the next one. Shoots.